Welcome back, everyone. Today's video is going to be my quick updated thoughts of where we are today in a number of sectors that I've talked about on this channel, because not everything's about, well, you know what. I figured I'd start with gold because, well, why not? I know I did a video on gold fairly recently, so I'm not going to go into too much depth here, but basically recently gold has had, well, a decent run. I mean, I think it's above 2000 now. But the equities have kind of stalled out. So there's a catch up to be made one direction or the other. I don't know which one it is yet. I do think gold has a bit further to go. Well, potentially much further to go, but more likely up is the near term direction, is what I'm saying. I've taken some capital off the winners, but I'm still definitely have holdings, big holdings. So yeah, I'm keeping holding here. The next one I needed to talk about is oil because this one's very complicated. I'm bullish, obviously. Price will go. I'm fairly sure price will eventually go higher, and so yes, in that sense, I do see reason to be bullish. And that being said, when I look at the risk reward and I look at the factors that would determine how high oil might go, um, I come to a bit of a different conclusion in that if oil goes to, I don't know, call it 100 plus, well, in that scenario, I could see that there would be a lot of big changes in the world. And if that type of thing were to happen, I think there's a number of things that would perform well like oil. And so from that perspective, I look at it in terms of if that type of event were to happen, what else would that mean? And versus if oil were to, let's say, go back to 60s, what's the risk reward there for oil? And let's say it capped out. Let's say there's infinite shale. Let's say not infinite, but let's say shale hasn't peaked, and a whole bunch of things. And so from that perspective, I, I'm just looking at the other alternatives as well. And when it came to oil, I never really saw a no-brainer entry point. Now, obviously, the price of oil was negative, and that was the obvious entry point. But I didn't think of it, still don't think of it as a no-brainer at the time because when it was negative, the equities were not pricing in negative. Everyone knew this was an anomaly. And when you look at what the market was looking at, like when it was negative, could it then have gone positive and stayed like at $10 for a while and bankrupted a whole bunch of companies? Maybe. I mean, obviously it didn't, but my point is that even though it went heavily negative, I don't see that one instance of heavily negative as a no-brainer because the price was low enough for a lot of struggling after. Now, obviously, I think I missed the bottom because I think that the bulk of the uh, panic, whatever, is probably done. There could be another wave of concern for something else, who knows? But my focus was elsewhere when the time was to be buying oil, when the bottom was, because I preferred the risk reward elsewhere. And it was kind of weird because as oil was falling, it I don't know, it looked to me like it became not the consensus trade, but one of the things that there were just a whole bunch of people talking about being bullish on oil or being bullish on oil or buying oil stocks from different places that you could see this. So really, I don't know. It never really seemed like the place for me to put money because there were just some other things that compared well, I thought. And really, the oil price has bounced back, but it's in the what 40 now ish, and it just seems to me like it's high enough for things to slowly wither away, but not high enough for things to actually make money. And yes, we're seeing a whole bunch of carnage in the write downs from the majors and this and that'll play out, and then we'll have an upcycle in oil. But I'm still kind of watching, but I haven't seen the entry for me. And it's completely possible I'll miss it, but there's probably some other investment opportunities out there. Okay, so unlike oil, this will be more quick, I hope. Lumber has done surprisingly well. Now, I spoke a few months ago about buying lumber, and I have to say, you can watch the video at the time. I'm not a genius. I knew that lumber had a slightly different cycle to the rest of the market. Home builders act slightly differently, but I in no way predicted anything near what happened. If you had asked me at the time, would I discount the second quarter of 2020 from the company's history? Would I prefer if that quarter never happened? I'd have said absolutely in a second. We just need to survive, and then there's value here. They ended up making $180 million in the quarter, and that was what, a sixth of what the market cap of the company was. Anyway, this is done surprisingly well, and the fundamentals have improved dramatically. And I am no longer a buyer here. I do continue to hold. I've not sold any of what I have because the fundamentals just got much better at a faster pace than I anticipated, and I still think that there's potential value in lumber. Now that said, in the short term, um, the prices on the curve are questionable, and there can still be. It's possible that the prices are still elevated because of supply disruption. That being said, a number of companies are back at full capacity, so we'll have to see how that goes. But based on it, like realistically, lumber prices have been higher for like less than a month ever, and that's was surprising to me. But I didn't know that was going to happen. But it has happened, and the equities have lagged. So I still think there's some upside here. So at the same time as lumber, I spoke about steel as one of the things I'm buying. And this is one that I am still buying. I'm not in a hurry to buy, but I'm over time gradually adding. Now, why is this? This investment has been less successful, I guess you could call it, than steel. The price has actually flat to down since I spoke about it versus lumber, which has been up a lot. But with steel, I made a point, well, with both actually, I made a point of mentioning that I was only interested in being in a lower cost producer. Why is this? I didn't want to have to worry about theta, decay. I didn't want to have to worry about losing money waiting for the market to turn because it could be a while. I don't know. We still don't know when things are going to be back to normal. So with steel, I'm happy to be in it as long as I'm in a low cost producer. Ideally, could make a little bit of money today in this environment and potentially a lot of money if things get better. Why is that especially relevant for my steel thesis? Steel is more cyclical than some other industries, well, many other industries really. And the point is, if you can be making money in today's environment when much of the competition is losing money, well, then you can have opportunities to maybe pick off assets from the competition or other creative uses of money. So with that said, I'm still a buyer. I still think the price today is unsustainable, but I'm only a buyer of, I'm not in this to try and take super risks here. I'm just slowly buying low cost producer. I think they'll be good in a few years. I don't know if it's going to start in 1 month, 3 years. I don't know. I think here is a decent point to move a little bit down the food chain, if you will. The components for steel, iron ore and met coal, two principal components. I prefer met coal of the two. I'm thinking that I'm actually of the things that I mentioned here, I'm actually slightly might be slightly bearish iron ore. Of course, I'm not short. I don't really do that. But I'm just thinking that there's been a number of disruptions over the past few years, really, in iron ore supply disruptions. There's been dam collapse. There's been um, certain regions of the world that have been more impacted, especially on the supply side for iron ore. So I'm thinking that the catch-up trade is in met coal. Of course, if steel demand stays absent, most, well, there's going to be struggling up the food chain, but I think that if there's probably opportunities in met coal. So the next group that I will touch on here is base metals. Now, I'm going to talk about them as a group because with, well, with multiple of them really, and I'm talking about, well, primarily copper, zinc, and I guess nickel is the ones I'm thinking of here. It's unclear how much of the price move has been based on fundamental demand improvement and how much has been based on supply deprovement. And by that, I mean, I don't know what happens as the supply comes back and we get um, potentially the price maybe pausing, maybe correcting, maybe it goes even higher. So I really don't know what happens here, and for that reason, I see two-way pricing risk. Now, of the three, copper and zinc are closer together. I prefer nickel, I guess, of the three, and then probably zinc, but there's not really that many investments in zinc that I'm seeing out there that I'm liking. So I mean, I guess that leaves copper. And I don't hate any of them. I don't love any of them at this point. I do think that there's money to be made in the next 2, 3, 5 years in all of them, but the next 6 months to 1 year is far less clear for me. So I'm back to this, I guess. Next is autos, and I've mentioned this a few times in different ways and in different instances. But I do think here it looks like we're past the worst of it. Now, I guess that would make me trend bullish, if you will. And so of the ways to play it, I still prefer parts to actual autos because you can actually get decent balance sheet and you can get a bit more growth in the part side versus the car manufacturers. So I'm still I'm still a buyer here, although there is less, probably less beta, if you will, less volatility than certain other sectors, but still I continue to be a buyer. Now, diamonds. This is an oldie, but a good story, I guess. I was way too early here. I thought that a company-specific catalyst would compensate. It did not because it got delayed and then delayed and then delayed, and then the cycle went worse than I kind of anticipated. So things got much worse. And then just just as things were looking like they were about to recover, and you can say I'm saying this just to be hyperbolic or whatever type of word you want to use, but really I was looking, and towards the end of last year, you could see the retailers were breaking out. Things, there was a buyout on one, but the other one was breaking out after a long downtrend. Things finally started like they were turning around. Some of the producers were breaking out, and then, well, you know what happened at the end of last year into this year. And now we're back to very unclear how long it's going to take to recover. And in the short, mid, long term, there's going to be, well, the supply is going to decline. Even in the most optimistic cases, it might be flat, but it's going to decline. And I mean, demand has historically tracked global GDP growth. So it should do well, but at this point, there could be a delay, and that could, in something like mining, that can be rough. And so I really want to be bullish, even though I know that it's possible that it takes a bit longer. And so that way, because I do have some capital already here, I'm going to hold off buying more. That being said, I'm bullish, but at this point, beaten. Shipping's another fun one. Fun in the hasn't been fun at all category. But it's very hard to predict or say how bad or good things have actually been in shipping, because it is highly cyclical, highly seasonal, and highly volatile. Meaning, actually, if you look at it, numbers year over year have been good, and yet the equities have not done well at all. Um, and my thinking on the reasoning for this, and it was something that I had a few chats with people months ago. It, I don't know the rules. We can't know the rules after this, because you have all of the um, material that's being stored, and that's great. But then what? How does that trickle back into the market? How does that supply trickle back into the market? And how fast does demand recover? How long do things take to whatever? How long does supply stay offline? How there's like no way of knowing any rules after what happened. So for that reason, I really don't know. And I think that in the longer term, the thesis will play out. Um, Chips don't last forever, and there hasn't been supply side investment. So eventually, it's probably going to do quite well. I just think that this whole situation may have delayed it by a few years, and eventually that's probably a good thing, especially when you look at what happened last time, and the life cycle of ships and how long things take. But until the turn, I think that this has probably put a delay on the bull part of the market yet. So I'm not saying we're going lower. I think my base case scenario is kind of flat for a while, and maybe deploy some more capital over time, but over time, because I don't really know if this is going to turn around quickly by any means. Anyway, that's all for today. I hope you enjoyed. Remember, nothing here is investment advice. And on the subject of oil consensus trade, investment advice, and everything else, I will leave you with a short story where a friend who, it was probably his second day to investing, he's one of the people who started when the market started falling. Anyway, on day two, maybe day three, he was talking to me and he said, "Oh, I knew I should have bought that CLM 20 stock that I told you about the other day." Anyway, so I'll leave you with that and have a great day.